Hi, Tasty Nation and all traders and investors. Today I'm going to talk a little bit about trading currencies. And specifically, I'm going to talk about a sample trade that I did in the euro, meaning the euro futures /6E. So here's the sample trade that I sent in to Tom and Tony.
Thomas back, my friend. You know what that means? More tasty trade with this fast market.
I'm Tom Sosnoff. He's Tony Batista. Welcome to Tasty Trade Live. Thank you for spending your week, your day, your life, your month, your whatever.
Yep.
Your anniversary, your wedding, your divorce, whatever it is. Spend it all with us. We do something on Fridays, which we call Fast Market, which is we take trades from viewers that write into us at tastytrade.com. These are trades that Tony and I have not looked at them yet. Our research team put this together from the trades that came in, and let's see what we've got. Dr. Z. Speaking of Z's, Dr. Z from just outside of Toronto. I learned where Dr. Z lives last time. I was on a webinar, and he's about 90 minutes north of Toronto, Tony, if you cared.
Okay, awesome. Well, I do now.
We are huge fans of the doctor.
Long-time viewer, yes.
High IVR, great for selling a strangle in 6E. Dr. Z, great minds think alike, because this morning, before this show started, and I did not see what you were doing, I sold the August 116.5 or 121. I'll be happy to do more. Similar order. There you go. I sold the August 1165, so the 116.5 put and the
121.5
call. And I just filled it again, did it a tick better. Boom. Thank you, Dr. Z.
Okay, so if you notice when Tom put on that trade, he just sold it naked, as a naked strangle. So he sold one put and he sold one call to effectively sell one strangle, but he didn't buy the wings. So in my case, I chose to buy the wings, and I'll go through that briefly now. So just a reminder, if you haven't seen this spreadsheet before, make sure you go back and watch my futures options video. And if we look at this line here, /6E, which is called EUR in Interactive Brokers, or you can look down here in this little mini chart. So when I go to sell this iron condor, I'm looking to collect a credit of around 0.004 points, which is $500. And I'm looking to buy my wings of the iron condor 0.02 wide on both sides. So that gives me a max loss of $2,500 minus the credit I receive. So let's pop over into my IB platform. Okay, so this is my favorite tab in my platform, and I've got a bunch of different products here that I like to follow. So in the currency section here, I've got Canadian dollar, Aussie dollar, euro, and Japanese yen. I'm leaving out the British pound from that list because I don't really trade it that often. Okay, so if I click on euro here, it charts the euro futures expiring in September, and it shows me the options chain here, and I'll just unclick the weeklies and quarterlies because I like to trade just the monthlies, and here's my trade. So back when I placed this trade, I usually aim for my short strikes around the 20 delta. So my short put at 1.17 and my short call at 1.215. Those were around the 20 delta at the time I put it on. This is now a couple of weeks later, so you can see the deltas have changed. And exactly what I wanted to happen has happened. My short strikes are still out of the money, and the delta has actually decreased on them. I'm just going to expand this options chain. So my delta on my short put is now only 12, and my delta on my short call is now down at 7 or 8. So that's the absolute perfect condition. This is a winning trade. And I'm now down to 27 days to expiration. When I put it on, it was around 45 days. There's my long wing there. So remember from my spreadsheet, I like to go 0.02 wide on my wings. So that's 0.02 wide is the 1.15 long put. And on the call side, 1.235 long call. So we're at 27 days to expiration here. So keep in mind, I'm going to start rolling that in about 6 days or so. And I'm going to move it just to the next cycle. 55 days to expiration is the next one. So that'll be, 6 days from now. That'll be at 49 days. Perfect time for tasty trade mechanics. I'll be closing my trade in the August options and reopening the trade in the September options. I'll just go to the next cycle and aim for the 20 delta again. So now let's talk about the wings. So Tom didn't buy the wings on his trade. He just did the short strike, so just a strangle. Let's see the difference here. I'm going to put this trade on again, and you'll see the buying power usage. So I'm going to sell that put one time, sell the call one time, that's a strangle. Look at the buying power it takes to put on this trade. 6,000 US dollars. That's huge. But look what happens now when I buy the wings. So I'm going to buy 0.02 wide on the put side, 0.02 wide on the call side. Look at that margin impact. It went from $6,000 all the way down to $1,600. And remember, the max loss I'm aiming for on these trades is around $2,500 minus the credit. So that's the huge difference with defining your risk with futures options. And of course, as I mentioned in the previous video, I don't have to worry about any buying power expansion here because they're never going to ask me to put up more than the max loss on a defined risk position. Let's look at the profile here. So there's the risk profile there. Of course, we want the price of the underlying to stay in between the short strikes, which is 1.17 and 1.215. If I held this right to expiration, of course, I would receive max profit on here, but we don't hold trades to expiration. So I am going to be looking to roll it in the next 6 days. Okay, so this is a weekend and the markets aren't open right now, so that's why it's not populating these values here. But just as a quick sample, I'll go and sell the 20 delta put in this expiration and the 20 delta call. So that strangle would take $6,200 in buying power. And then if I define my risk the same width as I just mentioned, 0.02 wide on that side and 0.02 wide on this side. And if I put in an approximate price here, remember I'm trying to aim for a credit of 0.004 points. There's the margin impact, only $1,100 in buying power. There's the profile. Again, this is an iron condor risk graph here, so I want the underlying price to stay in between here. It's not populating all these numbers, I guess, because the markets are closed right now. Okay, so that's how I trade currencies. I generally trade them pretty neutral. Why would I want to trade currencies when there's so many other interesting products with higher volatility to trade? Well, it's because currencies can help diversify my portfolio. So if, say, one of my positions in the NASDAQ had a big move, I wouldn't expect it to necessarily affect my position in the euro because I know those two underlyings tend to be uncorrelated. And I'll do a separate video at some point about the various correlations of the different products. If I look over at the Canadian dollar, you can see I already have a position on as well in the 55 days to expiration. So that's another iron condor right there. I would not expect the Canadian dollar to be very correlated with the euro. So that's why I don't mind having these two on at the same time. And I also have a position on in the Japanese yen. So there's another iron condor right there in the 27 days to expiration. So I'm going to be looking to roll that one in the next 6 days or so. Thankfully, the Japanese yen futures are also trading right in between my short strikes. This is like a perfect scenario. These don't always work out. And I did explain how I manage these when they move against me. So make sure you check out my Liz and Jenny video if you haven't seen that. But it's great to see some of my currency trades working out.
Beautiful. All right, Pat.
Awesome. Awesome. Well, you know what? Good job out of you and good job out of everybody else at home for playing along. We really do appreciate that. We do that type of segment twice a week on Wednesday and Friday, and you guys are always coming to participate. We really do appreciate it.
Sounds good to me.
Okay, thanks for watching. And if you have any questions about futures or trading futures options, please let me know in the comments. And thanks for watching.